What's going on, guys? Welcome back to the channel. Happy Black Friday. In this video we're covering Amazon.com. Now this site definitely has a lot of sales, as well as this company's stock price is down and it's pretty much on a sale of its own. Take a look at this, guys. It's had a high of 181 for the 52-week high and a low of 85, currently sitting at $93.71. In this video today, folks, we are going to look at what Amazon's doing right as a company, what they're doing wrong, and finally figure out the intrinsic value of Amazon so we can figure out what we should be paying for this company today. So I won't keep you too long because I know you have a lot of sales to take a look at. So with Amazon, what we're doing is we are ranking this company a 5 out of 10. Now, what the software does, it takes a look at the financial statements of the company, so the cash flow statements, their balance sheets, and income statements, and analyzes the company and gives a point if they're doing something right and takes away a point if they're doing something wrong. So with Amazon, its score is 5 out of 10. That's not a great score, to be honest with you, but let's take a look and dive deep into figure out what they're doing right and what they're doing wrong. So what they are doing wrong is that their PE ratio is incredibly high. You are purchasing this company, if you had to buy it today, for an incredibly high premium of 101.38 on average. Right now, currently, it's sitting at 84.43. That's probably due to the fact that this stock price has been dropping down, as well as their current ratio. Jumping into the current ratio, it's sitting at 0.94, something we don't want to see. We want to see a current ratio that's sitting at 1.5 or higher. That just indicates to us that they have enough assets on hand to cover the liabilities and pretty much how liquid is that company. And as we approach into uncertain economic times, like a recession and stuff like that, we want to figure out if we want to find companies that can weather those storms, as well as in hand with that is their debt to equity ratio, sitting at 84.19%. We don't like that, folks. We want to find companies that have a debt to equity ratio 50% or lower. That means they have a lot of equity on hand and they're not let's say leveraging their capital through debt, but rather through equity within the business. As well as they are slightly diluting, you guys. Share dilution's up by a percentage and 20 points over the last 5 years. Not the best. As well as their free cash flow is down. That is not healthy. We don't want to see that. We want to see ultimately their free cash flow increasing over the last 5 years, and that's unfortunately not happening with Amazon. But not all is doom and gloom. What they are doing right is that they have a high return on equity, and their EPS is also up by incredible amounts. That 200% increase, that is phenomenal to see. As well as their net income is up. The return on invested capital is sitting at 10%, which we want to see. We want to find companies that are sitting at 10% or higher, and they have that no problem, as well as their revenue growth is up as well. This free cash flow growth, however, even though it's down, folks, it's also keep in mind is why is it down? Is it because they are investing back into themselves? Because if they are, that is potentially going to be a plus like somewhere down the road. So you know what, take the loss right now, but hopefully that gets redeemed a little bit later on. Now, that being said, folks, Amazon, they don't pay any dividends. The free cash flow on average is $11.3 billion. Obviously, it is down from that average now. And yeah, their profit margin is slightly decreased from their 5-year average. Same with their return on equity, but their EPS is also down considerably compared to their 5-year average. So they are on a little bit of a decline in that regard. Now, that being said, folks, we're going to jump into the price analysis section here. So before we do that, my thoughts on the company are this. I like Amazon as a business. I think obviously it's the largest e-commerce platform, and I don't think it's going to be going away anytime soon. So I feel like this company overall is a fairly safe investment. However, what we should be paying for that company is the next story. So jumping into the price analysis section, I'm going to scroll down here. I'll show you what I did. And if you're liking this video so far, hit that like button and subscribe button. It means a lot to me. It means a lot to the channel. So here's the price analysis section. And what this tool does is very intricate. It finds the intrinsic value of any company. And what we're doing is a 10-year evaluation. And we have 3 different assumptions we can put in. I like sticking with 10 years because I think 7 to 10 years is a pretty safe bet on the growth of a business. And what I'm doing here, folks, is I'm taking a look at the historic numbers and I'm trying to get a rough estimate where I think this company may grow and may do over the next 10 years by giving myself a margin of safety. So For example, even though we've shown 28%, 21% revenue growth, I am going to do 14, 14.5, and 15, only due to the fact that it's almost $1 trillion company. So I can't assume that this company is going to be able to grow as quickly. Now, that being said, profit margin, I'm sticking to somewhere within this 5-year and 1-year range. So I did 4, 4.5, and 5. That only makes some amount of sense to me. Free cash flow margin, same thing. I'm sticking within this 5 and 10-year range. So that's why I did 3.5, 4, and 4.5. As well as the price of free cash flow and PE ratio. These are the numbers I want to see at the end of this 10-year evaluation, along with my desired return of 13%. And I hit calculate. And here it is, folks. Current price is $93.71. The average calculation comes out to be $88.84. On the aggressive side, though, at 50% revenue growth and all these numbers here, we are seeing that Amazon is undervalued, and the moderate average sitting at $88.38 is almost it's pretty close. It's pretty close to that current price. And if you come down here, folks, or come up here rather, we hit that numeric. We hit $85. So it's almost trading around that fair value. And if you believe these numbers, then you know what? This might just be a buy around this territory. Obviously, if this can go south of $90, that would be phenomenal. Because ultimately, folks, what I'm trying to do here is, if I think a business is strong and I think the fundamentals of the business is great, ultimately, I want to find this business at a decent price. The only thing that's bothering me with Amazon is their current ratio and their debt to equity. Even though it's a little bit on the high side for the debt to equity, it's something that can be forgiven down the line, as well as the free cash flow not being, I guess, higher than it was 5 years ago. But as I said, if that is in place of a future investment, then that can all be justified a little bit later down the line. The current ratio, as I said, it is sitting below that 1.5 mark. Obviously, I want to have the company a little bit more liquid. If this was, let's say, a couple of years ago, where the bull market was obviously hot and fresh, obviously before COVID, I would have probably no problem with that. So what am I doing with Amazon? I'm gonna wait until it gets below $90 again. I kind of wish I picked some up when it did hit those lows, but I'm gonna wait, and I'll probably jump in at that point. Personally, if you want to get your hands on this software to screen your own companies, head over to the links down in the description box below if you haven't done so already. There's a coupon there to get 20% off if you like the software so much. It's a 7-day free trial, but if you like the software a lot, hit up the coupon code FOUNDER and get 20% off your subscription for life. And this helps me analyze companies within an instant. As you clearly see, we're under 10 minutes in the video, and I already know what the financial status of the company is, what it's worth, and I can see everything more visually if I choose to do that. I can see everything, what's going on with this business, and I have everything at my fingertips. Anyways, folks, that is the video. Amazon, a little bit almost at fair value here. And you know what? They're going to probably make a killing right now today, as it is Black Friday. Hopefully you guys pick up some good sales. This may just be one of them. So with that being said, folks, I'll see you in the next video. Thank you so much for watching.